Good afternoon. Thank you for joining us for our Navigating the Home Buying Process webinar. Our emphasis today is on how to obtain a home loan. I'm Corby Gage with Coastal Housing Partnership, and with us today is also John Peterson, the Executive Director of Coastal Housing Partnership. And today's webinar features two local loan officers, Kevin Cravens with Guaranteed Rate and Lori Murray with American Riviera Bank. So thank you for joining us, panelists. Kevin and Lori are both part of Coastal Housing Partnership's network. And as part of this network, these lenders reduce their closing costs for their clients who are employed by companies that are part of Coastal Housing Partnership. So that is most of you as attendees today. The format for today's webinar, I'll be asking Lori and Kevin some questions about when to meet with a lender, what's involved in obtaining a home loan. And then the remainder of our time together will be for you to get your questions answered. We will be recording today's webinar, so we can send you a link to that recording. So the webinar format means that your cameras are off, your microphones are off, so we can't see you or hear you. If you have any questions, please put them in the Q&A, and you can ask your questions anonymously if you like. Feel free to put those questions in at any time during the webinar, and we'll get to those at the end of our time together. We'll make sure we have plenty of time to get all those questions answered, but we're going to go through our pre-assigned questions first. Before we hear from Kevin and Lori, I'd like to remind you that one of the benefits that you have since your employer is a member of Coastal Housing Partnership, we partner with local real estate professionals, and they all provide savings when you're purchasing a home. And that's whether or not you are a first-time home buyer. And there's no income restrictions on any of our programs. So these professionals include lenders, real estate agents, home inspection firms, moving companies, some residential developers. And generally you can save up to about 50% of your closing costs. So this is a great way to make it easier for you to become a homeowner. You can find the list of our network partners on our website, which is coastalhousing.org. And as I mentioned, both of our panelists, Kevin and Lori, are part of this network. So since the first step in the home buying process is meeting with a lender to find out how much of a loan you can afford, the information you receive today is going to be really helpful in making sure that you're prepared to make that first step to become a homeowner, and that you understand the process and feel confident about getting started. So Kevin, would you please share a little bit about yourself?
Sure. My name is Kevin Cravens. I'm a VP of Mortgage Lending at Guaranteed Rate in Montecito, Santa Barbara. I've been in the industry for 35 years now, my 35th year, and don't do the math. I started just out of college in Santa Barbara mortgage business, and this is the only thing I've ever done. My entire career has been nothing but a mortgage lender. So don't ask me about anything else in life. This is it. So happy to help you all along. And I think it is a great idea that Corby and John have put together for us to help you get on the path to home purchase process.
Great. Thanks, Kevin. Lori, would you share a little bit about yourself?
Sure. Thanks, Corby. Hi, Kevin and Johnny. Thanks for having me today. Kevin and I have been in the business together actually in Santa Barbara for the past 35 years. So I hope our math looks about the same. I am the Senior Vice President in charge of residential lending for American Riviera Bank. I started the lending group for them back in 2012. And prior to that, I worked with other local banks to help people on their path to homeownership. So thank you for having me and having us here to guide others on that path.
Thank you, Lori. Well, as you can see, we are privileged to have two loan officers with such great experience and a wealth of knowledge to share with you. And that's what, we find with our network partners is that they're just really eager for you to have the education, the information, the tools, the resources to get on your path to home ownership. So we feel like that education is really important. So thanks for being with us today. Kevin, let's start with you. It's always a big question. When is the right time for a potential home buyer to meet with the lender? Do they need to be ready to buy, or is it a good time is it, a good idea to meet with a lender just to get a game plan together?
Great question. I think it's never too soon to meet with a loan consultant, to chat with them, to set some goals for where you want to be in your housing expense, where you want to be maybe a few months from now, or a year from now, or even 5 years from now. There is never a time that we're going to say, oh no, you're not ready. Let's do this in a year or 2 years when you think you are ready. Let's start now so we can talk about where your income level is, what you are going to have for down payment, whether there might be any speed bumps we want to tackle now so we can address them before they become a problem in the future, like credit issues, things like that. So it's never too early to start, and you're taking a first step just by watching and participating in webinars like this and some of the other opportunities that Coastal Housing Partnership presents to you as home buyers.
So even if someone doesn't think they're ready to buy for maybe 3 or 4 years, it's still a good idea to go ahead and meet with a lender now?
More often than not, when you think you're not ready to buy, you'll find a house next weekend on open house and you're ready to buy. So yeah, it's never too early. And we want to try to get you early in the process, like I said, to address anything that might become a problem later in the home buying process, but also to tell you what you're looking at as far as what you're trying to gather for pre-approval process, tax returns, paycheck stubs, things like that. Also, what your mortgage payment will be, taxes and insurance might be in a particular purchase price range, and what you'd expect as far as the process and timelines, and maybe help connect you with other individuals in our industry like realtors and inspectors and things like that.
Right. So you mentioned pre-approval. What is that, and why is it important, Kevin?
Well, I think more so now than ever, a pre-approval, having something in hand from a mortgage consultant is important. First of all, just to get into the car with a realtor or get past the front door at a listing these days. They want to know that, the folks that are, if they're getting out there and putting time into, that's when I say they, the realtor, if they know that, they're showing you a $2 million house and you should be, purchasing in the $1.25 million, $1.5 million range, maybe they will readdress what they're pushing out toward you to see and or look at yourself on weekends. There are really 3 types of pre-approval, which we'll kind of get to, but there's a pre-qual. Go ahead, Corey.
No, go ahead. No.
Okay. There's a pre-qualification level, which is really just you've chatted with a loan consultant a little bit about what you have as far as income and assets to work with. And literally a pre-qualification can be done over the phone fairly rapidly. We'll ask you about what you think your credit looks like, what you have as a goal for your housing expense. And very quickly we can say, hey, it sounds like this is your kind of natural price point. The next level is called an actual pre-approval, where we've taken usually an online loan application, pulled a soft credit report, gotten a little bit more information from you, your actual maybe paycheck stub or W-2 or a tax return, and maybe a couple of bank statements to see where you really are. And we've taken you really through what we call a desktop underwriting loan approval system. And that pre-approval is what most folks have in the industry that are out there competing against you when you're looking at other home buyers, looking at properties. A pre-approval is the most common type of loan approval that you'll have at this stage. The third and highest level of pre-approval is an actual loan approval subject to a property. That's where we've really taken you through the entire underwriting process beyond just this initial desktop underwriting that I talked about. Loan approval is where a human underwriter has taken your tax returns, paycheck stubs, W-2s, bank statements, and said, you really are qualified for this and pre-approved for this, subject to finding a property in this price range. And the new California purchase contract that most realtors are now using actually lets the realtor say what level of approval you are at, pre-qualification, pre-approved, or fully loan approved. And those that have gone the extra step for the full loan approval can get out there and make an offer that's pretty darn competitive, even against a cash offer, because if your loan's actually approved, you could close in maybe 10 days, 12 days, as fast as anything else could be closed. So I think it's a great idea to at least start with a pre-approval with most loan consultants and maybe work your way up to the final loan approval if you have time and willing to make that commitment.
That's great. Now, Kevin, is there any charge for a pre-approval?
There shouldn't be, at least not with any of the local lenders I'm aware of. There's generally not any pre-approval charges. You may see a lender ask you to reimburse them for a credit report fee, and maybe in advance, but generally I'm not aware of anybody that's charging for any application fees or anything like that for the pre-approval stage.
Okay, good. So someone might be alert to that if they are being asked to pay a fee for that, that maybe they might find another lender.
Yeah, if somebody's asking for upfront money, I probably would maybe shop around a little bit and work with somebody that's maybe more local to our area that you can either meet with in person or over Zoom or a phone call that is local to our area that makes you feel a little more comfortable.
Great. Such good information. You touched on credit scores. Lori, let's go to you. Why is a credit score important in this obtaining a loan process?
Yeah, thank you. So the credit score is important because it represents how likely you are to repay a debt. So typically what you see is kind of the higher the credit score, in theory tells a lender the more likely you are that you will pay the loan. Credit scores will vary depending on how long you've had established credit, how many trade lines you have, meaning how many different types of credit you might have. It might be a credit card or a student loan or a car loan. So all of these different types of credit kind of help to develop a credit profile that the lender will then use to evaluate your loan.
Okay, and is there, when you're trying to get a home loan, is there a certain credit score minimum or, how does that play into the process?
So typically when a mortgage lender gets a credit scores for you, the mortgage credit companies, we actually use 3 credit scores currently. The system is going to 2 here shortly, so we'll see how that plays out. But generally, lenders are looking at the credit scores from Experian, TransUnion, and Equifax for the loan qualifications. And the minimum credit score is going to vary depending on the loan program that you're applying for. So typically for a conventional loan, maybe a loan that is a Fannie, what we call, underwritten by Fannie Mae or Freddie Mac, they're basically usually about a 620 minimum credit score for their programs. An FHA loan will go down to, I see they've gone down to 580. So those are kind of on the lower end of ranges for credit. But there's a number of things that will go into that. But most important is just making payments on time. And that is going to be the single most factor in determining how your credit is calculated, your credit score is calculated.
So if someone thinks they don't have a good credit score, they're hearing that, they're not hitting this 580, 620 number, should they try to improve their score before seeing a lender, or is that something they do while they're talking to a lender?
I'm going to go right back to Kevin on this one. Yes, it is a part of the pre-approval process. It's why we want people to come to us early in the process so that we can take a look at credit, see where there's opportunities for them to improve their credit score. And again, kind of, we talked about on the lower end of the credit, higher credit is a benefit for you if you have a higher credit score. It will get you a lower interest rate. It's definitely a positive to have. The higher credit score is definitely going to help. So I would highly encourage people to, first, you can go, California has a law that makes it so that you can request a credit report every year so that you can check your credit. Annualcreditreport.com. If you go to www.annualcreditreport.com, you can request a copy of your credit report. And I recommend people do that on a yearly basis. Number one, because we can, and you can get it. And it's a great indicator if there's things that can be corrected prior to approving, prior to going out and getting pre-approved.
Seems like a lender has such, strong knowledge of credit scores and what goes into that. And you're looking at those all day long. You're probably the best person to identify the things that someone might do to improve their score, rather than them trying to do something on their own.
Yeah, we definitely want to take a look. We talked about making payments on time as the number one thing that you can do to keep your credit score up. Additionally, keeping your balances, at least kind of at about 40% of what your total outstanding credit is another thing that can help. Varied trade lines, meaning when we talked about whether it's a car loan or a credit card, that helps. So there's a number of factors that go into a credit score. So it's just important to kind of be able to think about all of those as you're building your credit. I know we talk to people early on that might not have much credit. Personal story, my son is out looking for a property and we just, didn't even really think about it. The kids now have debit cards. They don't really use credit cards like we used to. They're not applying for those Sears credit cards right out of college. So so it's really trying to inform people about the benefits of credit, even though they may be a little bit nervous about it.
Another good reason to see a lender sooner rather than later, it sounds like. Now, one of the things that, I hear so often is, oh, I have this huge credit card debt. I want to pay this off before I go see a lender. I don't want the lender to see this on my score, that, and I want to try to, I want to either pay off my car or I want to pay down a credit card. And it seems like sometimes people are doing things that might send their credit the other way, or maybe they're using up what could be some of their down payment. One of the things I hear very frequently is, oh, I looked at my credit report and I see all these old lines of credit. I'm going to close these accounts because the lender's going to think that's not a good thing to have access to all this. What do you say to someone who tries to fix their credit on their own?
I'm laughing at Kevin's expressions. I always say, there's no reason until you talk to a lender. Until you talk to a lender, be careful about what you do with your credit. You have made a really great point. I'd rather someone have more money to help with their down payment than pay off a credit card completely. If they can get it down, as we talked about, maybe to 40% utilization, that's a good place for them to be. And there's ways to also mitigate, if they have less than 10 payments remaining on a car, will generally exclude it. So there's definitely things that people can do that will help their likelihood to get approved later, and then also not use all of their cash or reserves in order to clean up their credit. And when you talk about, we've also brought up a really great point about closing old credit lines. So building credit is about how long you've had credit. So you don't, that credit card that you got, right out of high school or college or whenever you got it, you don't want to close it. It means that you've had credit and maintained credit for a long time. So when you close that, then that becomes an account that's no longer really looked at. So I would encourage keep a few of those early credit cards, even if you don't use them. But just, again, check your credit though, make sure nobody else is using them too.
Oh, good point. Good point. Kevin, I imagine a lot of people on our webinar today are first-time home buyers, but it seems like the definition of that is maybe pretty broad, not necessarily what we would think. So who is considered a first-time home buyer?
Great question. And it's an impossibly easy threshold to be a first-time home buyer these days. In general, most lenders and loan programs define a first-time home buyer as somebody who has not had interest in residential real estate in the past 3 years. So you could have owned a property 5 years ago, sold it, no longer have any interest in real estate, and be a first-time home buyer again. And some loan programs consider that only one of the consumers in the mortgage be a first-time home buyer been depending on the program guidelines. So you may have two people buying together, one's owned a home recently and the other one has not. They collectively may be seen as first-time home buyers and have the opportunity to have first-time home buyer programs available to them because one party is, even though the other person is not.
Oh, that's okay. That's great to know. So are there first-time homebuyer programs available, things with lower interest rate or better terms, or are these something that someone should ask about if they're a first-time homebuyer?
Definitely speak with your loan consultant that you're working with about the many first-time home buyer products that are out there in programs. There are special terms available for folks that are in this definition of first-time home buyer, not having owned a property in the past 3 years, that aren't available to other folks that have owned properties. So sometimes a person who is a first-time home buyer is going to get a better interest rate or better terms than somebody who's actually owned 5 houses. So again, a good loan consultant can guide you in the direction, but they are very case specific to your situation, and certainly sometimes your income level can set where you fit in that, but also the zip code in which you're looking, or the town or county in which you're looking at properties can also make a difference for what's available through the many first-time home buyer programs that are out there.
Great. So a good local lender is going to really be able to identify those for you.
Mhm.
Great. Thank you. So Lori, one of the things that, people often think is that I need a 20% down payment. I need to save up this big down payment. Sometimes while they're saving, price of the homes gets away from them. Do people need a 20% down payment, or are there other options available?
There are a lot of other options available for people that don't have 20% down. 20% down programs can maybe help with, if you have less than 20%, you're going to be subject to some sort of mortgage insurance possibly, or we can structure a loan where you may not have it. There's a lot of programs available. For instance, if you're eligible through the VA and you've served our country, you may have an eligibility with VA. And if you have that eligibility, you may be able to come in with 100% financing with no money down. And VA loans will go, actually, I think the max one that we've done is $2.2 million VA purchase. So they are possible and they are out there, I know. So that is something to consider. If you have VA, definitely talk to your lender about how much eligibility you have and how that transforms into a purchase price for a home. There's also a program, I think people have probably heard a lot of acronyms in mortgage. Oh my gosh, more acronyms than you can imagine. But FHA is another program. And FHA loans are required just a minimum of 3.5% down. And you can have a co-borrower on there, or somebody to assist also too with helping you qualify for that loan. So there's 3.5% down. And again, that down payment can be a gift from a family member. It can be assistance from your employer. There's all sorts of ways that you can get help with that down payment as well. And then in addition, there's a program through California, CalHalf loan, another one where it's a 3 or 3.5% down payment, and then they also have like a silent second to help with down payment closing costs. With down payment and closing costs. So that's another helpful program that is out there. So there's a lot of different ways to get into a home without having to have 20%.
Great. Well, so it sounds like you've never also identified another reason to see a lender sooner rather than later. Let's find out what kind of down payment loan programs are available, what's out there, and really set up that game plan with a lender. Now, I hear sometimes people, borrowing from retirement accounts, or you mentioned gifts. Are there other sources of down payment if someone hasn't saved a lot of money?
Yeah, so there's sources. You mentioned retirement accounts. People can take money out of their retirement account if it's for purchasing a home for the first time. If they can take money out without penalty. There's limits to that amount of money that they can take, so they should definitely inquire within their plan to see that that's available. Their employers will often offer some sort of down payment assistance, and it doesn't hurt to ask. And then there's also federal down payment assistance programs. The Federal Home Loan Bank of San Francisco just had a down payment assistance program for middle income borrowers, where they gave $50,000, $50,000 grant. So there was no repayment necessary on that. And we use that to help, I think, 6 homeowners on the Central Coast get into their first home with that program. So there are programs around. Again, it's just asking your lender if they know of any. You can also search down payment assistance programs online. So there's different ways to get that down payment money together. And again, we did talk about gifts, and gifts can come from a variety of places, whether it's a family member, a close friend that you have a documented kind of relationship with. And just a thing to remember is a gift letter will be required if you are using a gift for down payment. We may need some sort of a proof of actually receiving those funds. So just a reminder for that. And then also too, people for some reason like to think that they can save their down payment maybe in their mattress. I highly do not recommend that. Please put your money in a bank somewhere where we can document it, or to a friend that will gift it to you later. But keeping it somewhere where a lender cannot verify it makes that a bit tricky once it comes later on to actually funding your purchase.
And is that because you're kind of just wanting to make sure that someone's not borrowing their down payment and having an additional debt obligation?
That's exactly what it is. Yeah, we want to make sure that they're not adding to their debt to income ratio by borrowing that down payment, as well as some of these programs just want to see that you have some, quote, skin in the game, that you are actually using your own resources to fund this purchase, that you care about having some equity in this property when you own it. And you're more likely to maintain your house payments and maintain the property if you have a vested interest in that property, maintaining the equity in that property.
Sure, that makes sense. Yeah. Well, we've talked a lot about meeting with a lender. Kevin, how does someone select a lender? What do you look for in a lender? How do you choose a loan officer?
I think most folks come across a loan officer that's been referred to them by a friend or family member or their realtor that they're working with that knows somebody that's done a great job in the past. That seems to be the most likely place you're going to find the lender you're going to end up working with. Sometimes people do online searches, things like that. But I think the most important takeaway from what we're seeing in our local marketplace in Santa Barbara is if you can connect with somebody who is local to the area, or at least to the county or Southern California in general, you're more likely to have a competitive advantage versus folks that might be working with an online lender or an out-of-area lender. Lori and I will attest to many times the listing agent on a property, when they get an offer from someone, when they see it's a local lender, they will pick up the phone and call us and make sure that the client that's presenting the offer is real. They can meet the timelines of presenting in the offer. We verify the down payment, things like that, which they really don't do or are more hesitant to do when it's an out of town or especially an online lender, which there's no human really to connect with. So more often than not, if you really want to be competitive and writing an offer where we have these multiple offer situations happening, local is better than not.
That's a great tip. So when you're saying online, you're talking like an e-lender versus, because a lot of times someone is going to do their transaction mostly online, or actually maybe never even meeting a lender. So you're just saying like an e-lender rather than someone that they could actually get on a call with or get on a Zoom call with and see.
Not to disparage e-lenders, but when I say online, Lori and I do our applications online, so we're all kind of online lenders nowadays. But where you have a local physical presence, an office in the local area, you've been around for long enough, the realtor feels comfortable that there's a human being I can get out there and touch and know that they're real, that when they say they're going to get something done, they're going to get something done. It makes a big difference in our marketplace.
Well, and that competitiveness, definitely when you're looking at multiple offers, you want to have everything in your favor in terms of being competitive and letting that offer get accepted. Now I hear a lot of people say, well, I'm going to just call around and find out who has the best interest rates, and that's who I'm going to pick. Is that a good way to approach selecting a lender?
Well, certainly shopping for rates is important for any consumer, and we're going to do it for ourselves as consumers, as loan officers. Hey, we want the best rate for our transaction as well. But more likely than not, you're going to jive with somebody. You're going to meet them on the phone or meet them in person, and you're going to know fairly quickly. We loan officers are going to ask you questions and get answers from you that you wouldn't tell some of your family members or your closest friends. Things that you keep very private. There's not much you kind of can hide from your loan person. We're going to ask you about your income, your credit, your bad debt if you have any, divorces, things like that, any job things we should know about, things that you don't like sharing with other people. So choose somebody you feel comfortable having that conversation with, because we are going to ask you those deep, intimate questions and get to know you very well. I will say, just personally, some of my closest friends in life started as consumers that I met through doing their loan. 30 something years of friendships have come out of being a loan officer for somebody that now are my best friends. So you're really going to get to know us pretty dang well.
Maybe they have secrets to hide that you don't want them to tell other people, Kevin? Is that why they kept you around?
Yeah.
Good point. Yeah, it sounds like someone who is really wanting to educate you and help you through the process, and not just trying to make sure that you get your loan closed the next day, but someone who is willing to work with you for a number of years. I've talked to so many lenders who say, oh, some of my favorite deals are ones that I worked with someone for 3 years and we worked on credit, and then they saved down payment, and then they got a promotion, and then we made the deal happen. And so I find that a good lender is just really not going to be not giving you the time of day because you're not ready to buy right away. So I think that's kind of a quality to look for in terms of how supportive of you they're going to be, and really counseling you through the process. I think that's a quality that seems really appealing in a lender.
Yeah. More than transactional. Really, we want to be there. Again, most of the folks that are in our local area want to be there for the long term for you, because we may not get you into a house right away. It may be a year or 2 or 5 years from now.
Mm-hmm. Right. Lori, this lending market is changing, always changing. So kind of how has this lending market changed recently? Kind of what are we looking at these days? What's the latest?
So the latest and greatest is what's happening in the next couple of days. The Fed is meeting today and tomorrow to kind of give us a direction on interest rates and where interest rates are headed in the future. We saw interest rates kind of jump up to the highest that they've been in 10 years, back in January. So we think, and we're hoping that when the Fed meets, that we'll start seeing rates kind of come down. And we already have seen them come down from their highs. Rates are definitely getting more attractive daily. And so what's important, though, when you hear about the Fed meeting and changing interest rates and how that affects you, generally when the Fed does something with decreasing rates or increasing rates, it's going to affect more short-term rates, maybe like on an equity line or credit card rates, that kind of thing. Mortgage is a little bit different in how rates are priced. Rates are going to be more based on where the 10-year bond is, and then that's going to vary with sentiment, right, with what's happening in the equity market, in the stock market. And so we've already seen a lot of the price anticipation of what's going to happen with the Fed already in our rates, as we've seen rates come down over the past few weeks, in anticipation that the short-term rates will also come down here in tomorrow. And how much that decrease that's going to be, well, we shall see, whether it's 25 basis points or 50 basis points. I think we're all hoping it's 50, just because that's what's already in the market. And if it's not 50, we may see rates increase a little bit over the short term. What else is happening in the market? like always with housing, we still have seen, we still see very limited inventory. So because of that, prices are staying, at least in our area, pretty stable. We're even, which makes housing more affordable, in a way. If rates are coming down and prices are staying where they are, then the house is becoming a little bit more affordable, at least payment wise. Hard to, again, crystal ball. I wish I knew where things were headed in the future, but I think, it's a supply and demand, and we just don't have a whole lot of supply on the South Coast of homes. So as long as that supply is tight, then we're going to see prices maintain as they are. But as always, if after you've talked to your lender, you have an idea of where you're at pre-approval wise and where you can qualify for, is just to remember that, a loan can be more temporary. If it affords you to get into a property, then it shouldn't be because the rate is higher than you would like. It shouldn't stop you from getting into that property. There always is a chance to refinance that property at a later time. Don't kill me for this comment, but as commonly said, you want to kind of date the rate and marry the house. So as long as you're into the house for a while, and you're happy where you're at, that rate can be something that's just a vehicle to get you in it. So I wouldn't not get into a home because you're worried that the rate, as long as if you can qualify and you're happy with the payment and the payment works for your budget, it's always a good time to get into a property.
And are there things you can do to kind of mitigate some of these higher rates that we have, although they are dropping? But is there any kind of strategies that you can do to have your rate be lower?
Yeah, there's some kind of short-term strategies. The seller may, or someone can buy the rate down for the first year or two with a buy down, kind of buying down that rate, whether it's a permanent buy down or a temporary buy down of that rate to kind of get you used to that payment. So there are ways to bring that rate down, at least on a temporary basis. And there's also different types of loan programs as well. We always kind of go for the standard 30-year fix, but there may be a loan that's short, a little bit shorter term, whether it be a 15-year fixed rate. If you can qualify for that payment, that might be a lower rate as well, or even a loan that's fixed for a shorter amount of time, say a 5 or 7 or a 10-year loan. So there are different ways to mitigate the rate.
Great. And another reason to talk to a lender and, find out what those options are and what your actual payments would be. John, are you seeing questions in our Q&A? We're ready to take questions from our attendees.
Yeah, great. We have a couple questions here. This question from an anonymous attendee says, I'm a first-time home buyer. And it says, how do I apply for My Home? That's capitalized, so a program that they've heard of to help with down payment. And is there a fee for My Home? So I don't know if either of you has experience with that or knows what that is. So I'm not sure.
I can help with that. Yeah, My Home is the one we talked about. The CalHFA loan is that's the kind of the silent second to assist with closing costs. And there's a rate that is attributed to that once you pay off that loan or pay off that house or refinance that loan, then you would have to pay that second back. And it's through CalHFA, so as long as you're working with a lender that is approved to do CalHFA loans, you have access to My Home as well as part of the CalHFA program.
So other than paying it back, is there a fee associated with it to get it, or?
No, I think there might be a small documentation fee to do that, but there's not a origination fee other than a documentation fee.
Okay.
And Lori, what's the definition of a silent second?
Good question. So a silent second means that a lien is put on your home in second position, but there are no payments due on that. So interest may or may not accrue depending on the loan program. But if you ever decide to sell that home or refinance that home, that second will become due.
Okay, so you're borrowing more money, but it's not costing you that much more.
it could get expensive. I mean, depending on how long you keep it, if you're, the rate, it depends on what the rate is, but you're not making payments on it. So
Okay.
any interest will accrue on that balance.
Right.
Great. And then next one, Kevin, you mentioned a little bit about the pre-approval, but the question is there fees associated with meeting with a lender? So maybe you can elaborate on that after pre-approval. Are there fees, or what would somebody expect with meeting with a lender?
Generally, locally, you shouldn't see any fees from any lender for the pre-approval process. I'm just not aware of anybody taking application fees or any sort of fee upfront to sit down with you or talk to you over the phone to start your loan approval process. The only time you should ever, at least in my opinion, pay any fees is at closing or at the loan application stage when you're actually in a purchase contract and buying a property. But I'm not aware of any, again, locally, that anybody charging any sort of fees up front. Lori, anybody?
Yeah, we don't charge for a pre-approval fee, and I don't know anyone
Right.
locally that will.
And so even if I'm meeting with you for a few years before I buy a home, there won't be any fees until closing typically.
You might have to buy me lunch sometime or something, but no, there's never any fees for a
Great.
year's of process here.
And the lender will lay out what all those fees are once you do close, so that you're aware of your costs to obtain that loan.
Yeah, right at disclosure, we have to disclose within 3 days of receiving an application, which includes an address, what that loan is going to cost on a loan estimate. And then we're bound by a lot of those fees that are on that estimate.
Right.
And I would add that that is the benefit of your participation in coastal housing, is those are some of the types of closing costs that your coastal housing partnership benefit can reduce at closing. So an important thing to remember with your companies that you work for. The next question is it an advantage to go through a credit union for a first-time home loan versus a major bank? Kevin, you want to?
Yeah, there can be. If you're a member of a credit union, you may get benefits that a bank or an online lender or other resource might not have available to them. There are really kind of three different types of lending entities. There are depository institutions such as American Riviera Bank or Wells Fargo or Chase, where they literally take borrower deposits. There's a brick and mortar building that you can go to. There are mortgage banks, which typically don't have depositors. They are places like Guaranteed Rate and some of the others that are around locally that we use our own funds to fund the loan, but in the background, Fannie Mae, Freddie Mac are purchasing the loan, and or other institutions in Wall Street are purchasing the loan. And then there are mortgage brokers, which are another great resource for getting loan applications and programs approved very quickly. Mortgage brokers don't lend on their own funds typically. They are brokering the loan to another institution, such as a bank or a mortgage bank like us. So a credit union kind of falls in the depository institution first one I mentioned, where I think you can get some good benefits by going to your local credit union to find great rates and terms and programs.
And Lori, another question is, so is the first step to buying a home is to look for a realtor?
I think the first step to buying a home is looking for a loan. Realtors can show you a lot of great properties, and they're extremely helpful for the home buying process. But I think it's probably going to be more important to find out how much of a home you can really qualify for. You don't want to go to a realtor and just go look at homes that you can't afford, because that will make you frustrated. So it's probably a good idea before you start looking to have a good idea of where you're at price range. And then you can, then your expectations, then your realtor can really hone you in on the price range that you're looking at, so that your expectations, everyone's expectations, are managed. And so when you started looking at those really houses that you couldn't afford, and then you have to look at what you could afford, maybe it wouldn't make you so discouraged. And we definitely don't want you discouraged in this process. It's you know, we all start somewhere, and then we use what we've learned and what we leverage to stay in that home or get into or move up, called a move up buyer, and move up into a new home at some point. So I would highly encourage someone to talk to a lender and then use the information to, and I'm sure your realtor will be very happy to know that you've already talked to a lender so that they can show you homes in your price range.
Great, thank you. And then the next question, I'll answer initially and then I'll pass it over to you. But where can we look or shop around for lenders locally? So again, Coastal Housing Partnership has a list of all of our network partners, which includes many local lenders. So that would be a spot for you to look, is at the coastalhousing.org. Would either of you add another way to shop around for local lenders?
I would go first to Coastal Housing. You know, a lot of great lenders on the Coastal Housing that are network service partners that have been in the community for a very long time. And also word of mouth. If, you know, we all encourage our clients to refer us. And I'm sure when you tell people that you're looking for a home, someone will be happy to tell you who they used and had a great experience with. So referrals are very important in our business as well.
One other question, Lori, you mentioned the 3 credit bureaus. How are those 3 different numbers? How do they work together? Is it an average, or what are we looking at when we see different scores with different companies?
So it's going to be kind of program specific. Remember, we talked about there's a lot of different loan programs, and in the past, it's been we've always just taken the middle credit score and gone with the middle credit score. But now there's programs that will average the credit scores. There's, and then also too, we are moving to a 2 credit score system. So it'll be interesting to see how that plays out with the credit scores. But there's, again, depending on the program, there are different ways. But generally, we're kind of going to be looking towards the middle credit score or an average.
Great.
And I just want to add if I can, the credit scores that you see as a consumer on your credit card statements or through some of the, let's say, car dealerships that just run your credit are going to use a different scoring model than a mortgage lender's credit report. So sometimes you may hear that you've got a 780 or 800 credit score, and then we run a credit report and we tell you, oh, it's 720, which is still great, but it's not quite what you thought. It's a different algorithm, different credit scoring model. So mortgage lenders are required to use a specific type of loan credit inquiry and model, which can be different than what you see otherwise. So I just want to forewarn you, we aren't always going to be the same. And it is not a static number. It changes all the time. Your credit scores from the 3 bureaus are going to change every month. So, you know, if you got a score of 800 a few months ago, you're probably still going to be near that. But if you had a score of, let's say, 680 and you've done some things to improve your credit or pay down debt or whatever, that score can move and fairly rapidly.
So that's another good reason to meet with a lender sooner rather than later to know what your mortgage loan credit score is. Now, when you get your credit score, credit report, credit score run by the lender, is that going to be an impact on the credit score? Does that reduce your credit score at all?
Generally, no. Most of the lenders that I know will do something called a soft credit pull, where it does not affect your credit scores. A soft credit pull is usually done in that pre-approval and pre-qualification stage of the loan process, and sometimes even that formal loan approval stage. Some lenders will allow you to use a soft credit report until you've actually identified a property, then it becomes a hard credit inquiry. A hard credit inquiry is something we don't want to see you getting if we can. Ask your lender up front when you're working with them, are they going to do a hard credit pull or a soft credit pull? Because a hard credit pull, in theory, can drive your score down 2 or 3 points. It isn't supposed to over a 30-day period from start to finish, but in practicality, I'm sure Lori will say this too, we often see where consumers gone out there and shopped to a lot of different places, either it be car loans or getting new credit cards or with lenders, and they've gotten hard inquiries instead, and it has hurt their credit scores. And the difference of 1 point can make a huge difference in the terms that are available, the loan programs available to you. So it's important to try to do, I'm air quoting, soft credit pulls if you can.
Great.
And
Well,
as we come into the holiday season too, it's a good reminder to not be opening up a bunch of credit cards. It's so tempting because as you hit the register, they go, you want to get our credit card, it's 20% off today. And you go, well, that's a great financial decision, but it can destroy your credit score if you do a number of those. So that's just a good thing to remember. You don't want to be opening up a bunch of new lines of credit when you're looking to get a home loan.
Well, we have a few minutes left here, and so if you have any additional questions, please pop them in the question and answer section. While we wait, I would ask if our panelists have any kind of final thoughts or piece of advice that you would give to somebody looking for a home loan. Lori, can we start with you?
Sure. My advice would just be just to learn as much as you can kind of about the process. Coastal Housing Partnership has a great layout of education programs to review as far as learning about it, as well as there's a lot of first-time buyers may be required to do home buyer education, and it can't be too soon to do that home buyer education. That certificate can be used for a number of different loan products, whether it's for an FHA loan or a CalHFA loan. So I would encourage home buyer education through both Coastal Housing Partnership and all that we offer on that website, as well as maybe looking into a home buyer certificate program.
Kevin, we got another question before you answer that. Any recommendations on quick ways to raise your credit score? Would you, if you're thinking about home buying, should you go to a lender first or talk to a credit repair company, or what would you suggest?
I would suggest speaking with a lender first, because we will, most loan officers have been around the block a while, have seen thousands of credit reports, and we will know pretty darn good what can and cannot affect your score fairly quickly. We may say, don't do anything until you've spoken with a credit repair specialist, but let the loan person help guide you on that. Like I said, the most important thing is we just don't want to see hard credit inquiries. We don't want to see a lot of new accounts opened, which can affect your credit scores. As somebody alluded to earlier, for gosh sakes, do not close any old credit accounts out. The computer scoring algorithm sees that as a bad thing, not a good thing. So don't close things if you haven't already. So there's some great credit repair companies out there, and your loan officer can guide you to if you do have credit blemishes. It's shocking how quickly things can now be resolved and removed from credit, or made less onerous on your credit report, especially medical bill payments and things like that, which, you know, there's new laws that are making some of these things that used to really haunt people for such a long time go away or minimized. So some great things in the works to help people get credit scores. But I have seen some miracles for folks that thought they could never buy a home, that had, you know, credit scores in the 500s. Suddenly they were in the 600s within a very short period of time, and all of a sudden they're able to buy a house. It can happen that quickly if you work with some good folks behind you.
Great. And then one other question that I really appreciate. Does Coastal Housing have education courses, and how much and where can I sign up for them? Coastal Housing, as Lori alluded to, has many educational resources on the home buying process. So I would start with our website, coastalhousingpartnership.org. We have a series of links and information that you can read there at your own pace. We have a number of these webinars on our YouTube page, and all of that is free. None of our educational resources are cost to you. And then we have regular webinars every month on topics like this, obtaining a home loan, and working with realtors and others. So check your company's newsletter and information, or if you're not seeing it, ask your HR team. But you can always visit our website to find out what webinars are coming up, and those are always available to you at no cost as a employee of a member employer. So yes, please take advantage of those. We want to help you be prepared and educated as you consider buying a home.
And to add to that, we have a home buying fair coming up on October 1st, Tuesday, October 1st, from 4:30 to 7:30. It's at the Marriott Courtyard in Oxnard, and it's free for you to attend. And it's just a great opportunity to meet with, you know, agents, lenders, home inspection firms, financial companies, and just get your questions answered. It's a you know, no pressure environment. You can just talk, you know, from the different real estate professionals at their booths. And then we also have many home buying seminars throughout the evening, and we also provide you supper. So feel free to come to that. If you want more information, go to coastalhousing.org and you can see more information about the fair. And we encourage you to attend. We find very frequently people come to the fair, they find their home buying team that they want to work with, and that they're quickly into a home. So you know, the steps are all there, and we, you know, we're just there to help you. Coastal Housing Partnership doesn't make any money on your transactions. We're not trying to push you into anything. We just want to make sure you have the resources available to you to become a homeowner if that's something that makes sense for you.
And Corby, to follow up to that, someone asked, do you ever have housing fairs in Santa Maria?
Yes, we do. Every other year we do. We just did one in October last year, and so we will have one next year in Santa Maria.
And if you go to our website, our network partners, we have network partners who serve Santa Maria, so you can certainly reach out to a lender or other folks before that fair, but we do have them throughout our service area. Well, I'll turn it over to you, Corby. That's all the questions we have right now.
Okay, great. Well, thank you so much for attending today. And you see the contact information for Kevin and Lori here. You're welcome to follow up with them or any of the Coastal Housing Partnership lenders that are on our website. We are excited for you to get on your path to homeownership, and you're also welcome to call John at any time with questions that you have. We are standing by to support you and wish you success on your path to homeownership. Thanks for attending today.
Thank you for having us.
Thanks, Lori and Kevin.
Thank you, panelists.
Thank you.
Bye.